Hello, and welcome to Future Proof. I'm Joan Hamilton, the Chief Content Officer at Inxeption. I don't know about you, but the daily headlines are sometimes a constant reminder of so much that needs fixing in the US. It's hard sometimes to be optimistic. But reading The Economist recently, I was struck by a cover story suggesting that right now, from the infrastructure bill to capital goods spending, its editors see the greatest convergence of pro-industry forces in decades developing in the United States. On today's Future Proof, I asked Inxeption CEO Farzad Dibachi whether he is feeling a sense of optimism that our economy is poised for a broad recovery.
I do. I believe a majorly sense of optimism that hasn't been there before, but I don't see it the same way economists see it, actually. I think that if you go back to just in our lifetime, say 1970s to now, we've had a lot of economic downturns, right? And economic sort of saying bigger catastrophes, right? And in each of those, what the role of the government has been to make sure enterprises come out of it unscathed.
Right.
Because the attitude has been, if the enterprises come out unscathed, they continue to hire people, they continue to have employment, and society will go forward, right? All of that has been great. Last year, with the pandemic, for the first time ever, there was a situation where the government stood up and said, to make sure we do okay, we got to make sure the enterprises are okay. So airlines, here's several $billion, and taxi companies, here's several $billion, and hotels, here's a bunch of billions of dollars. But also, hey, everybody, here's $1,400 for you to do what you need to do. I think that injection of cash into the everyday person is a massive, massive element associated with the optimism. Because now you have people who actually have something to be optimistic about above and beyond just having a job, and that their company, their employer got money so that they can continue to have their job. They actually got some money in their bank account, right? And that has now happened twice and going on to the third time. I think that more than anything else, the notion that the individual person in this country can actually get money from the government in times of trouble will go a long ways for many, many years to have optimism associated with it.
Interesting. Now, and what specifically about small businesses as well, right? Because small businesses often depend on local support. And when everybody in the community gets that $1,400 check, that really helps them. That is a way to support them above and beyond loans and paycheck protection. I mean, that's a real injection of capital that feels like support, right?
Well, I mean, if you think about it, it really is the first time ever in an economic downturn you've turned the pyramid upside down. You're giving money to individuals, you're giving loans to small business, so you're really truly propping the bottom of the pyramid as opposed to propping the top by just bailing out Goldman Sachs or giving money to Bank of America and making sure BofA buys General Motors. This is actually individuals, right? So you could, back in the day, you could give Chrysler a loan, or you could give money to 100,000 people to buy Chrysler cars, which would have generated more fun, the 100,000 people buying cars.
Yeah.
So I think that we have not truly seen the impact of that on the economy at large, and it will be coming for years.
And you think that will manifest as just higher spending rates, or just willingness to take risks, or housing investment, or all of that? Or
I think all of the above. I mean, if you think about our country as a whole, one of the things that's very different about it, given the size of the economy, for example, is how many people move, how many people change jobs, how many people go for a higher potential employment, how many people start businesses. All of those things require a certain amount of risk. And when you have for the first time actually the notion that you're not going to be left alone, you're going to be taken care of in case of some economic calamity, then you have more interest in trying those things. And our economy is ultimately based on risk. You are reducing the risk on the low end.
So the president has proposed a very ambitious infrastructure bill. It probably won't pass at the level that it's created, but it probably will generate a lot more money for things that we tend to take for granted in terms of physical infrastructure that we have not invested in a long time. I mean, that for us in the B2B space, I would think there could be a very interesting trickle out effect of that as well, as you not only sort of speed up a lot of things in business with roads being improved, all that kind of stuff, but again, you have the economy juiced up by people getting good paying jobs, fixing and building again.
Absolutely. I mean, what you have is you've had 3 rolls of cash dispensation to sort of the masses, and effectively you can look at this as a 4th sort of layer of that. And I think it's pretty obvious that there is several things converging that will make that pass in some shape or form. One of it is a smart thing to do, when effectively you can borrow money at 0 interest rate. It's not a big deal, right? Spending money on your infrastructure makes sense. So that's number one. Second is, as we just said, it's good for the economy in terms of employment, and several million people will get jobs. Third is, and I think this is pretty important because a lot of people in business have been watching this, and it's been sad to watch, is that you have a country like China spending like crazy on their infrastructure, and they get better and better on the infrastructure. And we're sitting here sort of not doing anything, even though we can borrow money at negative interest rates, essentially. And so that last part, we don't have much of a choice. If you asked anybody 10 years ago about, for example, high-speed trains in US, the answer was, well, US is very different than the European countries. It's just a very large country, so you can never have high-speed trains. And then you have China 10 years ago starting to build a high-speed train, and guess what? They just built a high-speed train network in the country. So you scratch your head. How does that happen? Now, there's a lot of issues associated with that on both sides of the aisle, right? One is you don't want to spend the money, the deficit. The other side is environmental issues and all that. But I'm hoping that all of that will come together and there'll be a good compromise about spending money, and it'll be hugely positive impact. Because it's a double impact, right? You get the jobs, you get the interesting things happening that way, but then you get the infrastructure that then can actually facilitate commerce going forward, which is a big deal. So fundamentally, there isn't really a business that can't take advantage of being closer to the customers and reducing the friction with those transactions. So as this money comes in and actually makes more of these transactions happen, and so it takes us up one level, huge opportunity, huge opportunity.
Now, you are always talking with executives and leaders of, major organizations, particularly in Fintech, which we were just talking about. Do you perceive their interest right now? I mean, from what I read, I perceive that they feel a little hunted right now by all these people pecking away at their quasi-monopolies in some cases. But how do you read the financial community in the context of what's about to happen in this country?
So about 5 years ago, somebody asked me about what's going to happen to fintech, and at the time I said, if you take Goldman Sachs and Morgan Stanley and Bank of America, and go down the list of sort of top 15, 20 banks and investment banks and so on, you add all of their market cap, and when you add all of their market caps, you get maybe a couple of $1 trillion. And then I said, take all the fintech companies, that are coming up to be, and startups and stuff like that, and you add all of their market cap together, and you get like maybe $10 billion, $20 billion 5 years ago. And so if you're the CEO of Bank of America, you're not sitting there worrying about these 20 companies that are doing little things, right? Now fast forward 5 years, you as a collection, the old school, are still up there and in pretty good shape, but a company like PayPal is now independent and worth $300 billion. A company like Stripe is private, but is now worth $100 billion. So all of a sudden you look at that bunch, and it's no longer 20 billion to 2 trillion. It's, about 800 billion to 2 trillion, right? So if you're smart enough, you're sitting there trying to figure out how do you deal with that. So the funny part is, we have a lot of connections to a lot of those companies to do a lot of different services. And I can tell you, it is sad how much they're still not interested in changing, which is classic, right? It's a
Right.
Blockbuster problem. It's a Kodak problem.
Right.
And human beings are no different than they used to be. So, it's not like in the last 20 years we have evolved to think differently. They're all ultimately protecting their turf. And that turf is definitely being massively nibbled on
Right.
by a lot of different people. And there is good stuff and then there's bad stuff, and they stand up and talk about the bad stuff. See, I told you this is bad. There's a company, two German companies actually, WireGuard and Green Sill, that recently had problems. And so he's like, okay, let me show you, see how these bad companies, bad actors. But the fact is, it's inevitable. We're going in one direction. And there'll be winners and there'll be losers. And on the loser side, the entrenched companies are not, some of them are not going to do well. I mean, there are Square at $150 billion market cap. Wells Fargo is sitting there. Wells Fargo's market cap is not much higher than that. So clearly, the capital markets are sitting there and cheering the little guys on.
I mean, is it chaotic, or is it, have they kind of circled the wagons in a specific way? Do you perceive any one thing from these entrenched financial
I
companies?
think if there's one way or one scapegoat for all of them, is risk, around regulatory risk.
Yeah.
They'll all hide behind that, and they all do. Well, we can't do that because that's not allowed by regulation. And truth be told, some of it could be true, but truth be told is also very much of a nice scapegoat. It's like, it's just not true. And the consumers demand it. When you have a company like a firm doing what it does, and from a technology perspective, extremely simple. There's nothing complicated about that technology.
Right.
And the fact that it did what it did under the watch of all the other people watching it do, it's just mind-boggling, right?
Right.
And we got the Blockbuster Kodak thing being repeated.
Right.
And it will not stop until at least several of these larger ones that we know of are going to have their Blockbuster day.
Thank you for listening to Future Proof. For more information, please visit us at inxeption.com.